Hello everyone, welcome to a new video here on YouTube. This is going to be just a small data video based on what has happened on SPX, also on BTC, and since pretty much the top in December 24, so you can compare what the sentiment was back then and how it is now, right? And this should be a reminder that every single one of us that is on X or YouTube or whatever, we are retail, right? I don't care if you have 2 million followers, you are retail, right? And by this, I mean that we are all emotional to some extent, and some just disguise it better as confidence or even just as plan of their business to sell hype, subscriptions, get some fees from the exchanges if you use them, whatever. But I want to present my opinions, what I saw, my strategy, and what happened, right? Because just by following this, it would have been a great cycle, right? The good moments to sell and buy. So we are about to enter November, and historically speaking, November, December have been strong months for SPX. And I want to show you how different SPX is now getting into November compared to the last year, right? And it's not something that I say now in hindsight, I didn't see it back then, or I completely ignored that. And now, after the fact, I explain what happened, which is what most people do. I'm not trying to say that I know way more. I'm just trying to show you why this strategy and data is normally ignored when it doesn't happen yet, it doesn't materialize. That's when most people say that a strategy is not working, because they don't have the patience or the ability to zoom out and let everything unfold. And when it happens, they get trapped, right? The same way they don't anticipate great moves or great ranges or areas to buy, because they're still victims of the recency bias, which in a downtrend is a lot of pain. So they cannot process and separate that and say, look, this is a good time to buy. I don't care if I've been suffering for a whole year. This is a good time to buy. The same way when you are at the top, you don't see that's the moment to sell, because greed is there. And why now if everything looks so strong? It might look strong apparently, but it's not that strong. The same way at the bottom, it's not as weak as most people see. So this was SPX here, November, right? You can see the correction in October, the same thing we've had now, even stronger than what we had now, because October is closing in all-time high, something that didn't happen back here. And I posted here in November after the impulse, right? The SPX has been building a very divergence in the 1 week, on the weekly, since April. So please bear in mind what this means, right? So this is March, July. So by the time I posted this, I said, it was here, right, that it was building a very divergence on the weekly since April. You might think, yeah, but it's not playing out. Sure. But theory says the longer it takes, the bigger the correction. Okay? And I said on the monthly, it still looks healthy. So far, so good. It gets shopping, but there's still a little bit more upside. Very limited, by the way, because this was 6K and the top was 6130, so not much. And I said the first we had an overheated 1 month signal before the final push, bearish cross, the confirmation, whatever. Okay, so this divergence, when I came back here to post again, the divergence extended, but now also lost the MA. Finally, you don't see weakness in price. Most people don't see weakness in price, but this constant correction, and you can see how the trend starts to lose strength. It's getting harder and harder to break previous levels. In fact, it barely breaks it. You can see the difference here. And now it gets rejected twice. And I said, update here 3 months later. Both the weekly and the monthly, I don't like what I see, because now the monthly is also looking bad. So the RSI rejected twice in the weekly. The last time that happened, the trend was over. Still, that's the truth. Too little data to back it up. But the weekly candle was engulfing, and that's not good. Every time there's an engulfing weekly candle, we have some correction, some decent correction. And 1 month, I said that now is entering dangerous territory. If the EMA is lost, the trend is over. Last time, when I said here that the last time it happened was over, we can see that price here in 2021 kept rising, but RSI was starting to look a little bit weaker. Pretty much the opposite here. Price started to look a little bit weaker here, heavier, and now we have this double rejection, even though price was still pushing. But the trend was weakening since April until December, since March until February, more or less the same. Then the bear market, right? So in a different post, I'm gonna remove now this. I said, I calculated and I said, okay, if we enter a bear market, which is more or less 20%, what's the next area that we can take a look at, right? Let me go to the monthly to see it more clearly. And I said, okay, the next area should be the previous all-time high. Previous all-time high, this in this case, the most reasonable. And then I just, let me see if that would be some kind of a bear market. I mean, if the cycle is over, we're not talking about that. I wasn't talking about a correction. I was talking about potential cycle being over. It was at 21%. So in stocks terms, that's a bear market, everything above 20%. It's not a coincidence that it bounces from here. So what I said next was on the weekly. The good thing about these crashes is that oscillators reset tremendously. In fact, we can see that here on the weekly. Oops, sorry. You can see here on the weekly, the reset was pretty much like the bear market bottom in June before the bullish divergence that started signaling the reversal. Not as steep as in the COVID crash, but you can see the huge reset. So it was a kind of a bear market kind of correction. What was the level? You can see it here. It was in this weekly candle around 5K, let's say. I'm not saying I posted it on the bottom. In fact, I posted on April 7th. And I'm not sure if that was the bottom. I don't really get, well, pretty much, yeah, what's the day, the bottom. You can see also the daily how oversold it was. Historical opportunity. Why is it opportunity? Because the risk reward ratio here, I mean, the potential downside here compared to the potential upside, even if it's just a bounce from oversold levels, it's good. So following data, I could have exited at 6K, above 6K, and enter below 5K. Not bad, huh, for being retail, but just data. The same data that you didn't pay attention, and by you I mean general people in general, right? And now, since then, we've been climbing. So some people say, again, based on emotions, once again, because that's all that matters, that SPX looks overextended, man. By the time we got to November last year, we were building a huge divergence. Now, since the huge correction, which in my opinion brings a lot of fuel for the next rally, you can see the behavior of RSI and the behavior of price. Clean, not even a slight divergence. Now we just crossed the EMA in October and we are in price discovery. If we cross the 70, what do we think is going to happen? But people say, man, it's so overextended. Overextended in what sense? In what you think is too much? Because I can see this in November, October 24, no one saw the weakness, right? In fact, when I said that the monthly now looked bad, it was a small divergence here into November, February, and then the big crash. It's not a coincidence that it's a big, oh, the tariffs, these tariffs, that. Yeah, it's been building a divergence for almost a year. What are we talking about? Right? Technically speaking, the move is going to be big, right? So now people say it's overextended because several candles without the monthly is full strength mode, above the 70. The weekly getting ready to keep pushing. The huge reset on the weekly, fuel enough for a few months. Cycle-wise, of course, the monthly is not as deep as September. That's why this is not a whole new cycle, in my opinion. Right? So, what do I mean by be careful with what you read, and everyone here is a freaking retail. They're just milking and the trend, the farming engagement. Here in November, with BTC already in a clear downtrend and breaking and showing weakness for a whole month, more or less, I think it was November 21. 100K next, always the round target, so the plebs can really remember it. What happened next was a 73% drop. 100K before end of year. This was November, so in a month BTC would print almost like a from 60K like a 40K. Yeah, almost a 100% after all this. Another impulse into 100K, right? Interesting. Then I posted in December. This is my main chart, one of the main charts, which is USDT dominance. This is a chart to illustrate my thoughts. That's the post when I posted a general chart for USDT dominance. You can look for that on Twitter. That the USDT dominance is bouncing off an important high time frame level. This was the top in March. There was also support here in the dead cat bounce for crypto in April 22. And we got to this high time frame support, building a very bullish divergence. So high time frame support showing strength. Be careful, right? This could be a local top before the end of wave 3, in my opinion. This is the wave 4 and right, or wave 3, whatever you're gonna call it. But my opinion, the end is still, the end leg is still pending, right? So you can see that now this is a double bottom, right? While RSI kept climbing. So not only this first sign, this second sign. What was BTC doing back then? Well, BTC back then has also been building a bearish divergence for a month that no one cared because all season was here, baby. And now this was a Fibonacci, by the way. I'm not gonna draw it now. This was also a Fibonacci. Double top, double bottom, bullish divergence, bearish divergence, double top. The same way you have a double bottom, which is normally W, you have M tops. And when these, sorry, I'm gonna draw it better and correctly. This area dropped, got lost, 98 actually, more or less, this top range. We had a capitulation into the local bottom. And again, the daily from oversold building divergences, marking a potential correction that reversal that I also pointed out. So I'm not a genius, I'm following data. The problem is when the time comes, people don't want to act on data, or they don't, simply because emotions lead. And I said BTC is still repeating a Q4 2023 pattern. However, I need to keep pushing this week for the fractal, a fractal that I posted, to be valid. Note the weakness that's been building, the weakness that no one wanted to see. And I said in 2023, it was 2-month bearish divergence last year that ended on a local top, 48K. 2 months, October, something like that. Local top in January, the ETF launch. And I said, will this end again as a local top on January 20 because it's Trump's day? That's the narrative. And now we go and see what happened in January 20th, sorry. Oh, actually, the top. Coincidence or not, it's just you have a narrative and you have data to support it. So now we can see that it's fear everywhere while price holds. So now people ignore data completely and it's all about sentiment. And now from that sentiment, they try to look for data to support that. And be careful with X, because X will always squeeze and milk the trend. If the trend is bearish, if that's what's getting all the attention, they're gonna post bearish garbage. If it's bullish, it's gonna be bullish. I showed you that with the 100K next in 2021, but you also have this wave 3. I don't care about the person, right? It's just the treat and the idea that traps you. December 23, we've just seen how weak BTC was already looking here, right? This is December 24, 23, when they started posting it with the first correction, the various divergence. If you want to still wait for a potential new leg up, we don't know if it's going to happen. It could just start correcting here. Enough fuel for that. It's a whole month. Wave 3 loading. Another impulse, riding the hype. Wave 3, guys, all season is here. Nothing pointed in that direction because BTC dominance was holding. Ethereum BTC was nowhere to be seen. Ethereum was not participating, and we know Ethereum apparently, historically speaking, is necessary. But since everything is moving, who cares, right? The same as DXY. DXY has to drop, but at the same time, in Q4, BTC was pushing together with DXY, so who cares, right? Now we forget about everything because price is moving. And now we are ignoring everything because price is not moving, right? So, and now, after he realized it was a fucking awful call, sentiment indicator, massive destruction, you were calling for alt season a little before. So now you follow this guy or any other and you buy the fucking top. And now, since we don't, I just said that it was a local correction for USDT dominance, but, and by local correction, I mean it's not a cycle top. Here we are, October, 10th month, even 11th months later, altcoins are still very far from December top. You follow euphoria, you follow sentiment, and you get fucking trapped for 10 months, and now you pray for the market to save you. Now data suggests that everything is good, it's holding, showing strength. When you have so many various news and price cannot break support, that shows strength. The same way at the top, when you have all the insane inflows of new or positive news and developments, and price is unable to break the resistance. The same way as I showed with XPX when it was already showing weakness. When you see the trend stopping, this is exhaustion. You can see how strong it is in every pullback. This is total, by the way. Total 3 for all coins. You can see the explosion and then weakness, clear weakness, right? So your portfolio might be now doing terrible because of this, but it's if you decide what the cycle is doing now, what's going to do next only because of your bags, then you will be trapped at the top, because if we have an alt season, your bags will probably be pumping into Valhalla, and you might think that the cycle is super strong, but there will be weakness signs, and that's when everyone ignores them, right? That's why the tops, we know, after a big run, the risk-reward ratio is terrible, right? Because, I mean, what's the possibility that it keeps going? At least lower than here, because it has already run for quite some time. It's lower. Could it keep running? Sure. But the risk is higher, right? So now, the risk is lower. We've been correcting for a long time. But since our bags are doing bad, we feel it's over. We want it to happen, but we don't really believe it. But it's really the market telling you that. That's the problem. That's why tops are so crowded, because it's only price that matters. And if price moves, I'm bullish, right? But the risk reward, we know it's terrible. Bear markets, the best risk reward ever. Always, in every cycle. Why are they empty then? Because it's all sentiment. They tell you it's garbage. You see it's an 80-90% down, so you might think it's over. It's a scam. It was a bubble, whatever, and you don't buy. And then the next cycle, a few months later, man, imagine if I had bought in the bear. It's the freaking same thing every cycle. Cycles happen because of fear and greed. Greed pushes prices way beyond they should be in a normal phase, or let's say in a spot slow inflow like we have seen with ETFs. It's just open interest and everybody chasing. Look at gold. People queuing in different countries to buy gold because it's safe after it's been running insane and it's fucking vertical and a blow off top. It's price. That's it. People buying gold now, it's because, okay, I missed it. So I guess it will keep running. FOMO. It doesn't matter if it's an institution. I don't care if it's a guy on YouTube articulating an incredible explanation to justify its FOMO. And when you don't buy the bottom, it's fear. And in these chops that we are now going through, people get chopped emotionally as well. So one day I'm excited, next week that impulse goes back, and I get a bigger hit emotionally. It's up and down, and there's a point I'm dead, and I don't believe anything. I want it to happen, but I don't believe anything. And that's what market makers want you to feel. Excited, fuck, it's over. Here we go, finally, damn, nah, it's over, man, it's been like this, fuck this market, this is a scam, blah, blah, blah. And then you chase. And then you think, man, this is so, what do I buy? I feel like I'm missing every trade. And that's what will happen on X. Random coins you have never heard of, or you haven't had of them for 10 months because they are like 70, 80, 90% down because they are garbage. They will hype them again, right? And you will try to buy everything, and that's how you buy tops, because you think you're missing out, right? So you're not applying logic. If I open this chart and I say, man, what a run, but I cannot buy here. It's a pity I've missed the run, but it's irresponsible to buy here. But if I only apply data in theory, it looks great, but then when it's time to execute, it's just emotions. I panic sell, I FOMO buy, I chase, I drop my bags, I leave the market because it's a scam, because I'm pissed when I should be learning and getting ready for the new opportunity. It's all emotions, right? So work on them, ignore everything. At least if it's not backed with real data. Ignore all these fucking rockets, all these hype posts, all these round targets, 100x, Doge to $1, Ethereum to 10k. It's always the fucking round number. Don't you see? It's not like Fibonacci extension 1236. It gets Ethereum to 6,345, and that could be a reasonable extension. No. It's just that's too difficult for the pleb, right? So let's make it round so that guy can now open a calculator and multiply their shitcoins. And if Ethereum does this, then my shitcoin could do that. And then you go look for X, and another guy that is selling hopium, and it tells you that, yeah, 10x, 20x, buddy, don't worry. Oh yeah, you just have to sit back and wait to be rich. And then reality slaps in the face. That why do so many people spend so many hours trading and charting if it's as easy as buying randomly and cashing out into heaven? Come on, guys, focus on data. Again, we still have time. The market is holding and it's compressing. That's all I can say. Now you decide what direction you think it can be based on everything we've been talking about, right? So take care and see ya.